Students, let us recapitulate all the concepts and journal entries which we have learned till now with the help of a simple comprehensive illustration. Before going through with this illustration, you must keep your notebook in which you have written all the journal entries which I have dictated to you till now. Now, again, before going through with this illustration, there are 3 points, most important point, that you must keep in your mind. The first point is that as you are already aware of one simple concept that you have learned in class 11th, and that is business entity concept. This concept says that the business and its owners are distinct persons. Here in partnership also, the firm and its owner, that is partners, are two distinct persons, and we are going to concentrate on firm as far as accounting entries are concerned. So we are going to make journal entries in the books of the firm. So always keep it in your mind that we have to think from the point of view of firm only. Second most important point is that transaction between firm and partner. So if there are, as you have learned till now, there are many transactions which are incurred between partner and the firm. So with this respect, you always keep in your mind that the transaction between firm and partner goes to profit and loss appropriation account. But there are certain exceptions when the transactions become charge against profit. In that case, the transaction goes to profit and loss account. In today's comprehensive illustration, it will be more clear to you. So until and unless it has been specifically mentioned that a certain transaction between firm and partner is a charge against profit, then you should take that transaction, transfer that transaction to profit and loss appropriation account. Third most important point is that the transaction between firm and partner is not settled generally in cash. So cash is not involved for the settlement of transactions between firm and partner. We use instead capital account of the partners. We use instead of cash, we use generally capital account of partner. That is, capital account is debited or credited for the settlement of transaction between firm and partner. As you have seen that all the transactions are generally settled with the help of partner's capital account. But one transaction you have learned in last classes, that rent payable to partner is settled in cash. So these 3 points you always keep in your mind. Now come to the illustration that I have framed for you. With the help of this illustration, the picture will be very much clearer to you. So now let us discuss this illustration. Suppose A, B, C are 3 partners. Suppose A, B and C are 3 partners in ABC and company. So ABC and company has 3 partners, ABC, and they are sharing profits and losses in the ratio 1:1:1. So they are equal partners and they are sharing profits and losses in the ratio 1:1:1. Now the firm ABC and company ABC and company must be preparing at the end of the financial year, must be preparing trading and profit and loss account. So the firm must be preparing trading and profit and loss account for the year. Now you are given the data that the firm has earned a gross profit of rupees 20,000 for this financial year. Now after adding sales, closing stock, etc., all items that you have, as you know in the class 11 discussions, all the items of income has been added and all the direct expenses are deducted, and the firm you are given that the firm has earned a gross profit of rupees 20,000 for the year. And you know that this gross profit is transferred to profit and loss account, that is second part of the financial statement that we already know from class 11th discussion. So this gross profit will be transferred to profit and loss account, and you know the entry is trading account debit to profit and loss account. So trading account will be debited and profit and loss account will be credited. So this gross profit will be transferred to profit and loss account by GP 20,000. Now again you have been given the data that the firm's other expenses, apart from the expenses which we are going to discuss, the other expenses like salaries to employees, interest to bank, salaries to employees, not partner, interest to bank, not to partner, interest on loan by partner is not the case, interest to banks or insurance premium, all the expenses together consists the total amount of all the expenses are 5,000 you are given. So this will be debited to profit and loss account, as you know it very well, to other expenses 5,000. Now the transaction between the firm and partners comes into play. Now concentrate on transactions between partner and firm. Suppose you are given in the question that firm has given loan to partner A. Firm has given loan to partner A and the loan amount is rupees 20,000 and the interest rate is 10% per annum. Now you know that on this loan by firm to A, on this loan by firm to Mr. A, firm will charge interest from Mr. A. So on this loan firm will charge interest from Mr. A and that interest will be an income for the firm. So interest amount will be 20,000 into 10%, and that is 20,000 into 10%, that is 2,000. Let us make a correction, make it 10,000, please make it 10,000. So on 10,000 loan 10% interest, that is 1,000 interest on loan is charged by the firm from Mr. A. So this is an income, and recall the journal entries. The journal entry for this interest on loan to A are, since this is an income, therefore So this is the journal entry. Partners capital account debit to interest on loan to partner. So partners capital instead of cash account, partners capital account is debited. And then interest on loan to partner account debit to profit and loss account. So this 1000 will be transferred to profit and loss account. This 1000 will be transferred to profit and loss account, and therefore this is an income, therefore it will come on the credit side of profit and loss account by interest on loan to A, and the amount is 1000. Now the next thing that you are given, the next details that you are given in the question is partner has given loan to firm. Partner has given loan to firm and partner's name is Mr. B. So Mr. B has given loan to firm and the amount of loan is suppose 20,000 and the rate of interest is at the rate of 5% per annum. Now on this loan, interest will become 20,000 into 5%, that is rupees 1000 again. Now remember the journal entry for this loan. When partner gives loan to firm, the journal entry that you have learned is when partner gives loan to firm, in that case the journal entries are interest on loan by partner account debit to loan by partner account, and this interest on loan is transferred to profit and loss account debit to interest on loan by partner. So this 1000 will be transferred to debit side of profit and loss account. So transfer this to interest on loan by B. Interest on loan by B, rupees 1000 will be transferred to debit side of the profit and loss account. So 1000 is an expense for the firm. Since B has given loan to firm, so B will demand interest for that loan, and this loan, interest on loan, is a charge against profit, therefore it will be debited to profit and loss account. This is not an appropriation out of profits. Now third thing that you are given in the problem is that suppose the partner C has given its building to firm, for official use. Now the firm is obliged to pay rent to Mr. C, and the rent you are given, that rent amount is rupees 500 per month. So 500 per month rent, 500 per month rent will be given by the firm to Mr. C. Now recall the journal entries. Please recall the journal entries that you have learned in the previous classes. If this rent is paid in cash, then rent account debit to cash. If this rent is payable, then rent account debit to rent payable. In either cases, rent will be debited with the amount paid or payable to the partner. So in this case, I am not going to detail whether this has been paid in cash or it is an outstanding amount. Whatever the case may be, rent will be debited with the amount 500 into 12, that is 6000. 6000 is the total rent, and this 6000 rent will be transferred to profit and loss account. This is a charge against profit, therefore Although this is a transaction between firm and partner, still this will be transferred to profit and loss account since it is a charge against profit. So profit and loss account debit to rent account. So 6,000 will be transferred to profit and loss account on the debit side of profit and loss account. So the posting will appear as to rent account, rent to Mr. C. You mention detail of the partner to whom rent has been paid as Mr. C, and the amount is 500 into 12, 6,000. Now you see that the profit and loss account is almost prepared. Add the credit side, add the total of the credit side. It is 21,000. 21,000. 12,000 minus 21,000 minus 12,000, and that is 9,000. This is nothing but net profit of the firm. This is net profit of the firm, and this net profit belongs to all the three partners in the ratio 1:1. So they are equal partners. So this net profit 9,000 belongs to all the partners equally. But before distribution, there are certain other items that are to be kept in mind, like interest on capital, interest on drawing, salary or remuneration to partners, and transfer to reserves. So for that purpose, the way we prepared profit and loss account after trading account, we are required to prepare an extension of profit and loss account, that is profit and loss appropriation account after profit and loss account. So now we shall prepare profit and loss appropriation account. So the way profit and loss account was an extension of trading account, similarly here profit and loss appropriation account is an extension of profit and loss account. And the first thing is that we shall transfer this net profit of the firm, because this net profit belongs to all the partners. So this is firm's profit. So we shall transfer this net profit of the firm to profit and loss appropriation account by passing a journal entry that you already know. So for transfer of profit, the journal entry passed was profit and loss account debit to profit and loss appropriation account. In this case, since it is a profit, not loss, therefore we are not passing this entry, we are passing first entry, that is profit and loss account debit to profit and loss appropriation account. Now pass this journal entry. So this 9,000 will get transferred to profit and loss appropriation account by profit and loss account net profit transferred. So 9,000 we have transferred to profit and loss appropriation account. Now after this I shall discuss with you the those items which are purely appropriation of profits. This 9,000 could have been transferred to all partners in their profit sharing ratio, but if this is not the case, if the partnership deed provides for partnership deed has a provision for giving interest on capital to partners, for giving remuneration to partners, and for transfer of reserves, then in that case this 9,000 will be first apportioned. This 9,000 will be first apportioned in the form of interest on capital, then in salaries or remuneration to partners, and then transfer to reserve, and thereafter whatever remaining profit, whatever profit remains, that profit will be transferred to all the partners in their profit sharing ratio. So very soon in the next class I shall discuss about the appropriation. I shall continue with this example only, and I shall discuss with you those appropriations.